Hello, everyone. So, my name is Dorothy Gibao, and my report is chapter 13, which is all about what is productivity and how it's measured. And on this presentation, our outline will be the following. First, what is productivity and why productivity matters? Second, what are the factors affecting productivity? And lastly, we will be learning on how to compute the productivity. And one of the primary responsibilities of a manager is to achieve a productive use of organization's resources. So the term productivity is used to describe this. Productivity is an index that measures output or the goods and the services relative to the input, which are the labor, materials, energy, and other resources that is used to produce it. Second, it is usually expressed as the ratio of output to input. So, meaning productivity is equal to output divided by our overall or over input. All right. And productivity has important implications for business organizations and for the entire country. So, for nonprofit organizations, higher productivity means lower cost. And for profit-based organization, productivity is an important factor in determining how competitive an industry or a company is. So, for a country, the rate of productivity growth is of great importance as well. So, meaning productivity growth is the increase in productivity from one period to the next relative to the productivity in the preceding period. And as for productivity growth, it is usually defined as productivity growth equals current productivity minus previous productivity all over previous productivity times 100. So, productivity growth is a key factor in a country's rate of inflation and the standard of living of its people. Productivity increases value to the economy while keeping inflation in check. And as for example, if productivity is increased from 80 to 84, the growth rate would be, so as we discussed on the previous slide, current productivity minus previous productivity over the previous productivity times 100. So 84 minus 80 all over 80 times 100 will be a 5% productivity growth. Okay, so productivity can be enhanced by the use of robotic equipment. Robots can operate for long periods with consistent precision and high speed. And the Hyundai Motor Company manufacturing plant in Montgomery, Alabama, they uses robots for assembly work. So this picture is an example which costs 1.4 billion dollar automotive plant, which is one of the most advanced assembly plants in North America. Okay, productivity measures can be based on a single input, which is the partial productivity, on more than one input, which is called multi-factor productivity, or on all inputs, which is called total productivity. The choices of productivity measure depends primarily on the purpose of the measurement. So if the purpose is to track improvements in labor productivity, then labor becomes the obvious input measure. So partial measures are often greatest use in operation management. And as for example of partial productivity, this includes labor productivity, which may be the units of output per labor per hour, units of output per shift, value added per labor hour, dollar value of output per labor hour. Also, partial measures can include machine productivity, which are units of output per machine hour, dollar value of output per machine hour. Another example is the capital productivity, which are units of output per dollar input and dollar value of output per dollar input. And last, for partial measures, this includes energy productivity, which are units of output per kilowatt hour and dollar value of output per kilowatt hour. And as for the multi-factor measures, this includes the output divided by labor plus machine, or output divided by labor plus capital plus energy. While for the total measure, this is computed for goods or services produced all over all inputs used to produce them. As a sample question, four workers installed 720 square yards of carpeting in 8 hours. So, productivity will be computed as yards of carpet installed over labor hours worked. So this will be equal to 720 square yards all over uh, the product of four workers times 8 hours per worker. So 722 yards over 32 hours. This will give us the productivity of 22.5 yards per hour. All right. And calculations for multi-factor productivity measure these inputs and outputs using a common unit of measurement, such as cost. And overheads are business costs that are related to the day-to-day running of the business. As an example, for determine the multi-factor productivity for the combined input of labor and machine time using the following data. So, output will be 7,040 units, while the input will include the labor, which is $1,000, material, which cost $520, and the overhead, which costs $2,000. So multi-factor productivity will be computed as output all over the sum of the labor, materials, and the overhead. So this will give us 7,040 units all over the sum of $1,520 and $2,000, which will result to 2 units per dollar input as our multi-factor productivity. Above all, why productivity matters. So productivity measures are useful on on a number of levels. For an individual, department, or organization, productivity measures can be used to track performance over time. So, this allows managers to judge performance and to decide where the improvements are needed. So, for example, if productivity has slipped in a certain area, operations staff can examine the factors used to compute productivity to determine what has changed and then devise a means of improving productivity in subsequent periods. And in essence, productivity measurement serves as scorecards of the effective use of resources. So, business leaders are concerned with productivity as it relates to competitiveness. So, for example, if two firms both have the same level of output, but one requires less input because of higher productivity, that one will be able to charge a lower price and consequently increase its share of the market. So, productivity means gains productivity gains can offset inflationary pressures related to wage increases. productivity increases result in lower costs per unit. And those savings not only generate higher profits, they can also help pay for the wage increases. So, productivity levels are important for industries and companies. For companies, a higher productivity relative to their competitors give them gives them a competitive advantage in the marketplace. This means with a higher productivity, they can afford to undercut competitors' prices to gain market share or charge the same prices but realize greater profits. While for an industry, higher relative productivity means it is less likely to be supplanted by foreign industry. All right. So, what are the factors affecting productivity? A commonly held misconception is that workers are the main determinant of productivity. According to the theory, the route to productivity gains involves getting employees to work harder. However, the fact is that many productivity gains in the past have come from technological improvements such as automation, GPS, GPS devices, copiers, and scanners. This also includes calculators, smartphones, internet and the search engines, computers, applications, voicemail, cellular phone, email, 3D printing, radio frequency ID tags, and many more. However, technology alone won't guarantee productivity gains. It must be used wisely and thoughtfully. So, without careful planning, technology can actually reduce productivity, especially if it leads to inflexibility, high costs, or mismatched operations. So, another current productivity pitfall results from employees' use of computers or smartphones for non work related activities. For example, playing games or checking the stock prices or sports scores on the internet or smartphones. And for example, texting friends and relatives during work hours. Okay, so factors affecting productivity, this includes standardizing. So processes and procedures for standardizing, wherever possible to reduce variability, can have significant benefit for both productivity and quality. Next is quality differences. This may distort productivity measurements. So quality is now much higher than it was then. But there is no simple way to incorporate quality improvements into productivity measurements. And third will be the use of the internet. This can lower costs of a wide range of transactions, thereby increasing productivity. So, internet, it is likely that this effect will continue to increase productivity in the foreseeable future. Okay, computer viruses can have an immense negative impact on productivity, and new workers tend to have lower productivity than seasoned workers. Thus, growing companies may experience a productivity lag. And safety should be addressed, of course, because accident can take a toll on productivity. Second to the last is the incentive plans that reward productivity increases can boost productivity. And lastly, design of the workspace can impact productivity. So, for example, having tools and other work items within easy reach can positively impact productivity. So, as productivity isn't everything, but in the long run, it is almost everything. So, a country's ability to improve its standard of living over time depends almost entirely on its ability to raise its output per worker. So, this is A quotation from Paul Krugman from The Age of Diminishing Expectation, year 1994. Overall, do not be confused with the term productivity and efficiency. So, efficiency is a narrower concept that pertains to getting the most out of a fixed set of resources, while the productivity is a broader concept that pertains to effective use of overall resources. All right, and this brings me to the end of my presentation. And again, my name is Dorothy Kibao, and I am your presenter once again for the chapter 13, which is entitled What is Productivity and How It Measured? So thank you for listening.